Hello and welcome to Steps to Investing on YouTube. Today we're talking about investment strategy, hopefully about creating a successful one, and joining me in the studio to talk about that is Lisa Conway-Hughes. Lisa, welcome to the show.
Thank you.
Now, Lisa is a financial advisor. She works for Westminster Wealth Management. Lisa, what is a financial advisor and how did you kind of get to be one?
I definitely didn't think it would be the career that I would go into initially. I started because I wanted a job straight out of uni. I didn't really understand what it would entail, and so I started off sort of researching and being a paraplanner, as we would call it, so doing the research and the admin. And then what I do on a daily basis is look after clients' money. But it's more than that. It's not really about the investing. It's about really getting under the client's skin and working out what makes them tick, what they're trying to achieve, and then building investments around that.
So the process of your job, you must see clients sort of throughout their investment journeys, from sort of starting out to more experienced investors. What, in your view, makes a successful investment strategy kind of across all of that time?
I think you've got to be doing the right thing for the right reasons, and so having the right time frame in mind. So if it's a medium-term investment, thinking about the volatility. If it's a long-term investment, really making sure you're taking as much risk as you possibly can manage to. Because you don't want to be having sleepless nights, but you want to make sure that you're really taking advantage of the long-term investment horizon.
Now, you mentioned the R word there, risk. Let's talk about that for a second, because it's important and it's on people's minds. How do you, when if I was to walk into your office and say, look, I've got some money to invest, how do you assess risk? What are the kind of questions you ask?
I tend to focus a lot on the negative side. So how would you feel if markets fell by a percentage? And because most people underestimate how they would actually feel in a downturn. They're really focused on, I want to make X percent a year. They're not actually thinking about what if it goes wrong, and especially what if it goes wrong at the beginning of investing, because then you really do have to hold your nerve to make sure that money stays there. And you wait for markets to recover. And
I guess that's on people's minds right now. We're seeing lots of ups and downs in the markets, lots of volatility. People must be calling you thinking, hang on a minute, should I be in the market? Should I be in the market at all?
As a percentage of my client base, not very many clients called, but the clients that did call were calling quite often because they were worried. They thought it was doom and gloom. There's a lot of Brexit words mentioned. And I think my job as a financial advisor then is to really hold their hand through that and make sure that they've got the information they need to feel comfortable to hold their nerve and to wait. And now that markets have recovered, I'm starting to talk to those clients about, well, should we reduce your risk? Because to me, it's a very clear indication that if you can't ride the downs, then you're in the wrong investment portfolio, really. Perhaps they need to be a bit more cautious.
And in terms of the people come to you and what they kind of already know, do you find that people come with assumptions about investing, or are they generally open-minded to?
I'd say open-minded. I mean, everyone's different, but I suppose the most common feeling when people walk into the office is that they're a little bit nervous. I think maybe a bit embarrassed that they feel they should know these things, especially if they're city workers, especially if they're in an industry that their friends probably assume that they already know this stuff. People talk about much more controversial things more easily than they talk about money. So I think sitting down to actually talk to somebody about money is really exposing. It brings up a lot of emotions, more than you'd expect, actually.
It's an interesting point you make, because of course when you're thinking about risk and the time horizon for investing and what you hold, emotion often plays a really important but actually kind of illogical part of investing. Do you find that when you speak to people?
I do, and especially when people have got, say, legacy portfolios, they'll keep that investment because their granddad used to do that, or their mum used to work at that company. And so I think you've got to take the emotion out of it, and that's perhaps usually why a professional is worth their weight in gold, because we can look on it with a cold heart. We can look at it from a maths point of view and help you get over that emotion, really.
And what about people who sort of started off on the wrong foot? That must be quite an admission to kind of come to you and say, I'm not sure I've got this right. Can you still help those kinds of people?
Definitely. And most people have really good intentions when it comes to investing, but don't necessarily have the time to keep, I suppose, nurturing that portfolio really, and really looking after it well, and just little things like rebalancing to make sure that the equity split is right, really.
Technical term, what's that mean, rebalancing?
Rebalancing, so let's say you've got one investment that goes up a lot and one that goes down a lot. At the end of the year, if they originally were 50-50, one would be worth more and one would be worth less. So if the right investment strategy was 50-50, let's say, at the end of the year you'd want to rebalance because you'd have more exposure to one and less exposure to the other.
So you sell a bit of one and maybe buy a bit of another. I see, okay. And can I ask a personal question? We like to ask all our guests this if we can. Tell us a bit about your own investing journey. You know, how did you get started and where are you headed?
I got started really because I wanted to be able to look clients in the eye and say, yeah, I'm actually doing this myself. And so when I started in the industry, I really didn't have a lot of spare cash. Living in London and being 25 or whatever is not, well, it's not that easy financially. So I just started off, as most people should, squirreling away 50 quid, 100 quid every month into an ISA and leaving it alone. And then I think I really got my investment hat on properly and sort of started to take my own money seriously when I had kids, and it wasn't just me and my Friday nights that I was thinking about.
And whereabouts are you headed? Is it about perhaps the kids' education, retirement, or is it something else?
I think it's all of those boxes really. It's about having enough money for their education. It's about having enough money so that I've got a safety net really. It's making sure that, well, I love this job and I wouldn't change it, but that might not be how I feel in 10 years' time. So I think it's about having money squirreled away so that you can make financial decisions that make you happy rather than because you have to.
That's fantastic. So finally, 3 top tips. If you were thinking about a successful investment strategy, how to create one, what would your kind of top advice be?
Top tip number 1 would be hold your nerve, don't freak out, don't sell when markets are falling, ride the storm. My next top tip is don't listen to your mate. I've had so many clients that walk through the door and they've bought an investment because their friend heard that it was a good idea. I think do your research properly. And then the last top tip really I think is invest monthly, commit to it. Every time you get a pay rise, pay a bit more and just keep it simple.
That's fantastic advice. Thank you very much for joining us. That's all we've got time for today. And thank you for watching. That just about sums up the show. Just a quick reminder, do like the show and subscribe to the channel if you can. And don't forget the rest of the content for Steps to Investing is on steptoinvesting.com. Thanks very much for watching and we'll see you next time. Goodbye.